I'm about to tell you something most financial advisors will never say to your face. I've spent years studying market cycles, bubbles, and the patterns that repeat themselves over and over. And right now, every single signal I track is flashing red. Let me show you what I mean with a story. Two friends, same income, same starting point, same $50,000 portfolio. One of them is about to lose 70% of it. The other is about to protect every dollar and come out richer on the other side. The difference between them isn't luck. It's that one of them listened to the warning I'm about to break down for you right now. By the end of this video, you'll know exactly what that warning is and exactly what move separates the investor who gets wrecked from the one who gets rich. Stick around till the end. I'll show you exactly how I'm positioning my own money after this research. Meet Jason and Marcus, both in their late 30s, both good earners, both believers in the AI boom. And why wouldn't they be? AI stocks have been the best performing trade of the decade. Jason's portfolio, 90% in US tech and AI stocks, a chunk in Bitcoin, and he just put $15,000 into a private fund tied to a $1 trillion rocket company, convinced it's the next big thing. Marcus has the same starting portfolio, same exposure, same excitement. But one afternoon, Marcus sits down and watches a breakdown I put together, the same one I'm walking you through right now. And there's one line that stops him cold. Every great financial bubble in history forms around one thing, a truly transformative idea. Railroads in the 1840s, the hot Nifty 50 stocks in 1972, the internet in 2000, and now artificial intelligence. Here's the pattern. The great bubbles always happen around the most important ideas, and the bigger the bubble, the bigger the burst.
Look at Amazon during the dot-com run-up in 1999. The stock went up 6 to 7 times in value. Then, in the crash, it fell 92%. 92%! The technology was real. The internet did change the world. But the stock still got destroyed before it recovered. AI is following the identical script. Real technology, real impact, but wildly overpriced stocks. Right now, US stocks are trading at 35 to 40 times earnings. For comparison, Japan's market peaked in 1989 at 65 times earnings and didn't fully recover for 35 years. My read on this, AI-leading stocks could fall as much as 70% from here. Jason never watches a breakdown like this one. He's too busy watching his portfolio hit new highs.
Here's the clearest sign to me that we're near the top, and it's the exact private fund Jason just poured $15,000 into. A rocket company valued at roughly $3 trillion, built partly on promises of Mars colonization and mining asteroids. When a company defines its addressable market as a quarter of the entire global GDP, that's not ambition, that's the classic description of a market peak. Personally, I wouldn't touch a stock like that unless it fell to 5 or 10 cents on the dollar. Marcus watches this part and pulls his pending application out of a similar private fund. Jason doesn't see any of it. He's already telling friends at dinner he's in early on the next $1 trillion company. This should make you angry, for both of them. The average person never hears this warning. Not because advisors don't see it, but because warning clients is bad for business. In 1998 and 99, the old investors firm called the dot-com bubble early and lost half its assets. Clients left for advisors who kept telling them to ride the wave higher. A 1999 survey of Wall Street analysts found over 99% privately believed a crash was coming, while firms told clients everything was fine. Jason's advisor never mentions any of this. Growing accounts don't ask questions. So what does Marcus do with his money? Here's the blueprint. Move 1, cut US tech. If you have a big position in US tech stocks, sell it all. Marcus trims his 90% position. Move 2, go international. 60% into a non-US index, Europe, Japan, Canada, emerging markets, already outperforming since early last year. Move 3, gold, up to 10% as a hedge. Move 4, bonds, the rest at 4.5 to 5% for steady income. Crypto, Marcus sells his Bitcoin, an unnecessary piece of nonsense headed towards zero. Jason does the opposite, all in on tech, holding Bitcoin, waiting for his fund to 10x.
The warning doesn't stop at stocks. Housing stretched too. Even a 30% correction would still leave homes expensive by historical standards. My advice: entrepreneurs should build cash reserves and brace for tighter credit. Everyone else should build practical, durable skills and strong community ties, because when a bubble bursts, it hits hiring and spending across the whole economy, not just portfolios. Marcus builds an emergency fund and a second income skill. Jason doesn't. He's confident his portfolio covers it all. To be fair to Jason, not everyone agrees with me. Major firms argue today's AI giants run on real profits, not 1999-style speculation, with some banks projecting over $7 trillion in AI infrastructure spending through 2031. So this isn't settled, and nobody's right every time, including me. But ask yourself, if I'm right, which one are you closer to, Jason or Marcus?
So that's my full breakdown. The warning, the trap, and the exact moves I believe separate the investor who survives a bubble burst from the one who gets wiped out by it. I want to know honestly, are you more like Jason right now or more like Marcus? Tell me in the comments. I read every single one. If this video gave you real value, smash that like button, subscribe if you're new, because every week I break down what the smartest money in the world is actually doing, not just what they're saying. This channel uploads a brand new video every single week, and I've already got a whole library of financial tips and tricks waiting for you right here, so go check those out next. Hit the bell so you don't miss the next one. See you in the next video.
Thank you for listening. If this message resonated with you, subscribe for more content to help you build a life of intention and power. And more importantly, go grab that notebook. Your new story starts now.
If this message feels like it hit home, that's no accident. It's your inner voice calling for change. And here's the truth. Staying the same won't get you anywhere new, but taking action will. That's exactly why thousands of people just like you have already broken free from living paycheck to paycheck by following a simple, proven blueprint. You don't need special skills, you don't need a second job. What you need is the right system, and it's already helping over 55,000 members build real financial freedom. So, here's your choice. Close this video and go back to business as usual, or click the link below and take your first step towards stability, freedom, and the life you know you're meant to live. The opportunity is here. The question is, are you ready to take it?